Lo and behold, I joined Metaplex in September 2022, and FTX just blows up 2 months later. That was shocking, to say the least.
You guys have done some great writing out there and have really built yourselves up as a very credible brand.
I think in the last 2-3 years, you've really seen an explosion of liquid tokens in the markets.
Especially in 2023, post-FTX, really just strengthened the team at Metaplex Foundation.
The liquid fund side is interesting because
most people are interacting with Metaplex when they're using applications on Solana, whether they realize it or not.
There's so much money that's flowed into venture and crypto over the past however many years.
We're around a $50 million fund today. At our scale, it makes sense for us to be able to spend time on a lot of these liquid tokens.
Everyone's like, well, who are all the liquid funds? Like, we need to go talk to them.
Metaplex, for folks who don't know, is the digital asset protocol that underpins the on-chain economy on Solana and the SVM.
I think in the last 2 years, you've seen the rise of
your thesis on various token projects once the token is live.
We actually built and shipped many of our most important products during that bear market.
Like, who's the next buyer of some of these assets?
They've established themselves.
This ecosystem isn't going anywhere, and neither is the Metaplex protocol.
This is a slightly different conversation because usually we talk to teams that are raising a seed round or, they're the very earliest stages. So excited to dig into Metaplex, given you guys, I think, are unique in that capacity, or at least one of the first times we're talking to a project that has a liquid token live and is sharing the story around the project, as well as how backers and token purchasers came into the project a bit later. So anyway, maybe just to get started, and we're going to spend most of the time up front talking about Metaplex and laying the groundwork. But James, Modular has you guys have done some great writing out there and have really built yourselves up as a very credible brand, particularly as it relates to your thesis on various token projects once the token is live. So yeah, maybe you could tell us a little bit more about yourself, where you came from, and the Modular story.
Yeah, absolutely. Thanks for having us. Very fun to be here. I'm very glad people appreciate the writing because we put a lot of work into it, partly because it helps us refine our theses, and I think it's come to be very helpful for a lot of the projects that we've come to back. We started Modular 2 years ago. I'm one of the co-founders. My partner is Vincent. Both of us came from a tech investing background. So I had spent 6 years across public and private tech investing at two very large funds, D. Shaw, which manages 50 billion, and Altimeter Capital, which manages over 10 billion. Covered a lot of fintech payments, which eventually morphed into a lot of the things that are quite big in the crypto ecosystem, whether that's DeFi, whether that's stable coins, and eventually fell down the crypto rabbit hole to starting Modular 2 years ago. We're around a $50 million fund today, primarily focused on liquid tokens. So after they come to market, but we have a very big emphasis around things that are in the small mid-cap range. So if you look at a lot of the things that we spend time on, Metaplex included, but also alongside it, Lacrosse, Stride, GeoNet, many of the things that we've published or written about, they've mostly tended to be in this sub 100 mil, fully diluted valuation range. And I think that's where we found quite a bit of success, but also very interesting opportunities for that, liquid token fund to come and do a lot of deep research. We've done a good amount of venture from the fund as well in categories such as DePIN, but very excited and humbled to be part of the Metaplex journey.
The liquid fund side is interesting because there's so much money that's flowed into venture and crypto over the past however many years, whereas on the liquid side, maybe not as much, but it's seemingly becoming much more attractive for allocators to the space. What's your general perspective on the liquid fund landscape? And, what are some of your expectations for how it's going to change over the next few years? Because I think one of the challenges has always been like, like who the next buyer of some of these assets are. And at least in our portfolio, everyone's like, well, who are the liquid funds? Like we need to go talk to them, once they launch a token.
So this liquid fund dynamic, I think, is a relatively novel one. It was actually part of the genesis for how we decided to start Modular in the first place. I think if you had looked at crypto prior to 2020, there weren't a lot of applications for the most part that were live with product market fit and a lot of metrics that you could go in and kind of try to understand how much traction do they have, how much users do they have, maybe how much protocol fee revenue that they might be generating. So it was really 2020, 2021 and after where you had DeFi summer, you had NFTs, you had a lot of games that were hits at the time. And it created this new opportunity in the markets for folks like myself that come from a more traditional investing background that's used to looking at something that has metrics, has fundamentals, has traction, has product market fit, analyzing it, dissecting it, and trying to understand like, hey, is this something that could be very interesting? I think that opportunity had a little bit of an air gap if you look over the last several years, partly because crypto has been such a venture-dominated asset class because this industry had to get birthed from something. And at the very beginning, there just weren't that many things. You needed venture capital to go take that risk, to go back a lot of these things, have them grow up and scale. I think in the last 2-3 years, you've really seen an explosion of liquid tokens in the markets just by virtue of the natural maturation of projects as they've grown up, as they've shipped, and as they've come into the liquid markets. I think for a while, you had a lot of larger, more established funds. They might be managing several $100 million or $1 billion plus in AUM. And the reality is for a lot of those funds, it just doesn't really make a lot of sense for them to come in and spend time on a project that's 50 mil, 100 mil, 200 mil, maybe even 500 million in liquid valuation. That's just not a very good use of time. They're not able to purchase the token in the liquid markets. And even if they can, it's just not a material portion of their fund size. So I think in the last 2 years, you've seen the rise of more liquid funds like us that have come into play. We're around a $50 million fund today. There's folks that are as small as 5 to 10 million. There's folks that are a little bit larger than us. But I would say at our scale, it makes sense from a fund portfolio construction perspective for us to be able to spend time on a lot of these liquid tokens. But that's a little bit about how we've seen the landscape evolve just in the last few years.
I went to the liquid fund meetup that Artemis puts on in New York City, I think on a quarterly basis. It was fun. I think someone actually, I don't know if it was you guys, but someone definitely pitched Metaplex again. So it's cool to see people still.
It was probably Cosmo from Pantera, or it might have been someone else. But yeah, there's a handful of folks that are very, very bullish Metaplex.
We have a lot of supporters.
It's good to hear. Maybe some more after this conversation. Mack, this is the first time you and I have met, but yeah, it'd be awesome to learn a little bit more about you. And there's so much to the Metaplex story. I think going back to the origin within the Solana Foundation, but maybe if you could kind of give us the bird's eye view of yourself and Metaplex.
Yeah, happy to. And thanks again for having me. Excited to be here with both of you today. So I'm Mack. I lead strategy at Metaplex Foundation, really responsible for overseeing all of the non-technical functions with things like BD and partnerships, marketing, and a lot of our strategic initiatives. Metaplex, for folks who don't know, is the digital asset protocol that underpins the on-chain economy and on Solana and the SVM. Most people are interacting with Metaplex when they're using applications on Solana, whether they realize it or not. Metaplex Foundation is a nonprofit foundation that's responsible for helping kind of oversee and steer kind of the growth and development of the Metaplex protocol and the community behind it. And so I've had the pleasure of working closely with a lot of different community members like James and others to help build awareness of the protocol and really expand kind of the breadth of developers that we're serving. In terms of kind of how people use Metaplex, there's really kind of a few main ways. One of them is if you're choosing to create a token or a non-fungible token, Metaplex has a lot of different standards for doing so. So similar to like ERC20 or ERC721 on Ethereum, Metaplex has what we kind of collectively call the digital asset standard. And there's a bunch of kind of different subcomponents of that for different types of asset classes. So whether that's fungible tokens, non-fungible tokens, there's different Metaplex standards that make sure that those assets are interoperable across the ecosystem. So anytime you create kind of a Metaplex asset, you just know that it's going to work. It's going to show up in wallets. It's going to show up in explorers. You'll be able to list it on a marketplace and things will just work, and really underpins kind of that on-chain economy. We also have a lot of programs that make it easier to create and distribute these assets. And so kind of the vision behind what we built is rather than developers needing to deploy their own smart contracts when they're creating assets, we build a lot of those smart contracts and have a library of audited contracts that people can use. And instead, those developers can focus on application building. We also have a lot of different developer tools, different SDKs and CLIs that make it easier to create and interact with those programs. And then kind of the last component of that protocol is infrastructure for basically reading and querying that data. And so we built a lot of software that makes it really easy to index that asset data. And actually last month, we announced the Aura network, which is a data network for Solana and the SVM that makes it easier to index that data through decentralized means, provides DA for these assets, and ultimately different storage functions to make it easier for developers to interact with the data that they're ultimately creating through our smart contracts. You're right, the protocol has been around at this point for quite some time, about 2 years old, or I guess maybe closer to 3 years old at this point. Originally was incubated within Solana Labs, and then ultimately was contributed to the Metaplex Foundation. Many of the people that you see working on the protocol today have been around since the very beginning. And so I've been fortunate to kind of be on this journey with many of the same developers and other contributors to the protocol over the last couple of years.
It's got to be a pretty wild journey. I don't know when you joined in, but like the Solana 21 through today roller coaster ride has been pretty insane. So yeah, maybe like an overview of how that was like post FTX, like riding. I remember like the break point. I think it was in 2022. It was just insanity when it was hitting $250 on Sol. Like just it felt pretty frothy at that time, but like just going up, going down. Yeah, how was that experience?
Yeah, so it's funny. So I've been at Metaplex for about 2 years now. Prior to Metaplex, I actually spent my career in TradFi, started off doing investment banking. I worked at a distressed fund after that and was always kind of like a generalist that never had an industry that I really gravitated towards. And then I truly discovered crypto in kind of early 2022. Prior to that, I was one of those people that bought crypto in a Coinbase account, but never like really used crypto. And it was actually NFTs in the beginning of 2022 that drew me into the space. Kind of coming from a credit background, this idea of digital property rights, owning assets on the internet, all that really resonated with me. And so I started going down kind of the crypto rabbit hole at that time. Ultimately continued to get really interested in crypto. And I kind of made the decision I wanted to go work in crypto full time, kind of mid 2022. This was like a bear market. I was like, this is something I want to do long term. This is the right time to jump into crypto. I'm getting in at the bottom. I'm making a career bet on myself. I'll kind of work during the bear market. And then when the bull market comes back, I will have accumulated this great experience and kind of the world will be my oyster. Lo and behold, I joined Metaplex in September 2022, and FTX just blows up 2 months later. That was shocking, to say the least. I did not expect that to happen when I made that jump, and it has, you're right, absolutely been a whirlwind. I remember thinking to myself kind of at that break point in 2022, this is like the greatest job in the world. Like, I'm so glad I made this jump. And then ultimately, things changed quite a bit. I think in many ways, going through that turmoil of the bear markets, especially in 2023 post-FTX, really just strengthened the team at Metaplex Foundation and many of the overall just Solana community. We actually built and shipped many of our most important products during that bear market. It gave us an opportunity, I would say, to kind of tune out the noise, not actually think about token and that sorts of things, and instead focus more so on what is the tech that we're building, how can we make this the best ecosystem for developers to join. And so whether it was things like kind of solving royalties, which still in the Ethereum ecosystem, they're like figuring out how do we enforce royalties on NFTs. We actually solved that in the Solana ecosystem dating back to the very beginning of 2023. And that was due to technology that Metaplex built and was able to get integrated across the ecosystem. We built other things like compressed NFTs, ultimately actually implemented protocol fees during that time as well. And so we made a lot of really, I would say, important decisions and met certain milestones that kind of paved the way for where Metaplex is today. It wasn't always easy, and I think the folks that kind of stuck around during the bear market certainly are closer because of that, and the community in many ways, I think, is a lot more resilient, and you can tell that it's here to stay. I know people draw analogies to call it, say, the Ethereum ecosystem and some of the things that happened, some of the crashes that happened back in the day. I think Solana has gone through its moment as well. And I think that's truly a differentiating factor for the ecosystem, and something that gives me confidence that this ecosystem isn't going anywhere, and neither is the Metaplex protocol.
Almost every single one of these interviews that we do or conversation we have, it's inevitable that someone gets sucked in, in some bull market. And then very soon thereafter, it evaporates. So in my case, I joined CoinList in May of 2028 and 2018. Sorry, we're not quite in the future yet. And I was like, ETH peaked at 1,400, but I'd rallied up to like 1,000 around the time I joined the industry on a full-time basis. And, CoinList was like that, it did the Solana ICO. It was the center of token sales. And then that market just totally died right after I joined. And, it was definitely a long bear market at that time. How about James? What did you get?
I was going to say very similar experience to you and Mack. Vincent and I, we had decided to start the fund towards the end of 21. We transitioned out of our roles in early March of 22, I believe. I think at the time, ETH was like 3,500, 4,000. We were fundraising and, traveling and running around doing all the things it takes to get a fund going over this 4-month period. And pretty much every week, it was like red candles for the week. By the time we were trying to close the fund we went through Luna in May. We were working on closing the fund in early June, and then 3AC happened. I literally saw ETH go from 3,500 to sub 1,000 over the 4-month period that we were trying to get the fund out the gate. And fortunately, we had a great group of backers. We closed the fund. Got out with enough scale to get started. But yeah, it was a complete roller coaster from when we had committed to, kicking things off. But I think very similar sentiment to what Mack had shared. I think a lot of, what gives you the conviction and kind of making you stronger for us in terms of investment process, in terms of focus, in terms of, the things that really matter and move the needle. In terms of culture, I think a lot of that was really forged through this like very difficult stretch that a lot of people experienced.
Definitely have had those experiences. I think, we all share that, being forged in some crypto winter. Mack, Metaplex is synonymous with NFTs, and obviously the breadth of things that you guys do beyond just simply NFTs, but like the NFT standard on Solana, I think is unique in that there's like almost just more you can do in NFT land in Solana versus maybe Ethereum, partially due to cost and partially a lot of the tech that you guys have built. So maybe like just frame that out a little bit more, like, okay, on the NFT side, these are the core things. On the fungible side, these are the core things, like the offerings for developers to take advantage of.
Yeah, for sure. Happy to jump into that. I think something that's really interesting about the space that we sit in is if you think about like what elements of blockchain technology have found product market fit, I would argue that the creation and just like transfer of tokens and non-fungible tokens is one of the most widely used use cases for blockchains in general. And that is really great for Metaplex because our protocol is ultimately at the center of that, specifically within the Solana ecosystem, which coincidentally is also seems to be kind of the fastest growing ecosystem this cycle. We ultimately, because of that, end up touching nearly every application on Solana in some form or fashion. And so that means that kind of the use cases that we're powering is a lot broader than what people realize. It spans everything from, call it meme coins to gaming to DePIN. There's a lot of different use cases that Metaplex is touching besides just kind of like the PFPs that people came to know last cycle. And maybe so I can walk you through a handful of examples of how some of these applications are using Metaplex today. One of them, maybe the most popular application in crypto this cycle, is Pump.fun. So every time a meme coin is getting launched on Pump.fun, they're actually using Metaplex's token metadata program to attach metadata to that meme coin. And so that could be things like the ticker, it could be things like the name of the token, but ultimately the ability for all of these applications on Solana, whether it's a Radium as a DEX, whether it's your Phantom wallet, whether it's an Explorer, the reason that all of those different applications can read that asset and share that information with the end user is because it's pulling information from Metaplex's token metadata program. Similarly, if you think about something like gaming, for example, so there's a handful of very popular games on Solana. Ones people might have heard of could be like Star Atlas, Photo Finish, Aurora, others like that. They're actually using Metaplex to create assets in game. So we have a handful of different NFT standards, whether it's compressed NFTs, whether it's a new standard that we launched earlier this year called Core, which is a lot more dynamic and flexible and allows kind of developers to build in different types of behavior with the assets that wouldn't be possible otherwise. These are gaming applications that ultimately are actually using Metaplex when they're creating assets within the game. Similarly, something like Helium on the DePIN side, for example. So they're actually using Metaplex's compressed NFT technology to represent hotspots on chain. And so these hotspots are being used to track kind of rewards distribution and things of that nature for people who are operating these physical hotspots in their homes, but need to represent that data on chain. And so I think like maybe the simplest way to think about it is all of this is essentially different data that is being created on chain, and people are using fungible and non-fungible tokens to represent that data, and ultimately using Metaplex's programs for the creation of that, but also the management and kind of querying of that information as well.
Curious, kind of slightly as a side, but you brought up the point at the beginning, this idea of like PFPs, or like what people thought of NFTs maybe in the last cycle. What's your guys' hot take on the future of digital art on chain? And do you guys expect some of these assets to come back, or NFTs really to be used more than maybe the way it's kind of being used now?
Yeah, so maybe I can go first. I'm hopeful some of that comes back for the sake of my bags. I own a lot of these things, and so it would be great if they did. But in all seriousness, I think there's a couple of trends that I've seen. So for one, I do think that speculative assets do have a place kind of in crypto and using blockchains. I don't think that's going away. Last cycle, it was PFPs on the NFT side. This cycle, it seems to be meme coins. But kind of user behavior and desire to kind of engage with speculative assets, I think is actually something that blockchains and crypto facilitate quite well. And I don't know that that's going to go away. I think on the NFT side, we have seen a surge in different types of utility that's now being incorporated into these NFTs. I mentioned, for example, that core standard that we had released earlier this year. So one of the things that's actually really unique about it is the ability to connect essentially like off-chain behavior with on-chain data. And so you could be, say, completing a quest on a website that an application has built. And the fact that you completed that quest can then be represented on chain by updating, say, an NFT that's tied to your profile. And so we're seeing a lot of that type of experimentation. From where I sit, it feels like it's very early innings for that. We released this standard maybe about at this point, like 4 or 5 months ago. And we are seeing, I think last month, mints were up like 3x month over month. This month, again, up close to 2x month over month. And this is all in an environment where people kind of talk about NFTs being dead. And so I don't know that NFTs are dead. I think they're just evolving to kind of get closer to what people always envisioned NFTs would be in the first place, which is just representing different assets and different data on the internet on chain, and using NFTs as the vehicle for tokenizing that data.
Very diplomatic answer, Mac. James, what about
you? I can share my perspective. I think the forms in which the speculation or speculative means by which people have expressed themselves have changed over cycles. So I would say if you looked at last cycle, gas fees were just really expensive on Ethereum, which is where most of the capital and liquidity were. And it was just unfeasible to think people could go launch 2 million different meme coins in a span of 6 months, and for a very broad user base to be able to trade that. And I think NFTs really catapulted to the top as a way for, or like just a handful of people, frankly, to be able to, kind of speculate and transact on those assets. I think that form factor changes when you bring down the cost by like a factor of like 100x or 1000x or something. Partly because gas fees on Solana are very cheap, kind of they have paralyzed execution, partly because of programs like Metaplex that enable that cost to be very cheap in terms of minting assets. So I think if you look at this cycle, it's been much more dominated by meme coin trading, which both in terms of minting is generally cheaper than NFTs, but also the unit of account is just like infinitesimally small. Like you can buy 10 cents of it, you can buy $1 of it, you can buy $10 of it. There's no forcing function of, hey, if you don't buy at least one SOL, then you can't participate in the mint. So I think that transition has happened, and it's quite reflected in the forms of activity that you see this cycle. I think the beauty of where Metaplex sits in that ecosystem is that it's evolved into this very broad platform that's more or less tied to asset creation of almost any form in the Solana ecosystem. And I think that product velocity that we saw during the bear market of continuing to ship, continuing to iterate, I think at this point they have something like 5 different, kind of core kind of pieces of infrastructure that they provide. They have the original regular NFT mints facilitated by token metadata. They have the compressed NFT mints facilitated by Bubblegum, which are 100x, 1000x cheaper than the regular mints. They have the 404 standard, which is like a hybrid fungible, non-fungible standard. They have the core platform, which is meant to be the next generation after token metadata. And then now they have Aura, which acts as this decentralized data indexing layer. So the beauty is Metaplex kind of inserts itself in the equation, regardless of what the user activity is. If people mint a lot of PFP NFTs, that goes through Metaplex. If people mint meme coins on Pump.fun, that asset creation goes through Metaplex. If people are doing it in a mass scale like Helium, where you need to mint millions of these to represent your hotspots, that goes through Metaplex with a cheaper cost that is affordable for Helium to do it at that scale. So the beauty is like they've kind of created this very broad platform. I think if you look at all these products, they were all shipped in the bear market. Bubblegum, I believe that was rolled out, and Matt, correct me if I'm wrong, in early 23. And then if you look at Core, 404, and Aura, those are all released or announced over the course of Q1, Q2, Q3 of this year. So you've seen this huge acceleration in product velocity. Obviously, the seeds for a lot of these ideas were planted much longer before, well before the actual release date. So I think every crypto cycle changes. I think when you bring costs down by an order, 2 order, 3 orders of magnitude, the user behavior just naturally evolves in terms of what's the most sensible frontier to participate in speculative activity or any other sort of on-chain financial activity that people do. And I think it's pretty incredible how Metaplex has built this platform to facilitate that, and it's front and center in the Solana ecosystem.
Job of taking my question and bringing it back full circle to Metaplex. Excellent backer you have here, Mack. Maybe that just kind of segues perfectly into the modular Metaplex journey together. James, how did you guys first kind of decide to take a position on here? What's that process been like of you guys meeting the team and then deciding to purchase tokens, or however you guys, kind of worked with Mack and the rest of the Metaplex leadership team?
Yeah, absolutely. So I can provide some context. I remember seeing Metaplex, follow the Solana ecosystem during the bull market. I remember seeing the splash that Metaplex had, raised this large funding round, had some of the best backers that you could have imagined at the time. Multicoin led the round, Alameda.
There are also some famous celebrities.
And there's a lot of celebrities, like Michael Jordan invested. There's, a number of
not Michael
players.
Jordan, the crypto fund manager.
Not that Michael Jordan, the other Michael Jordan. So I always remember seeing it. So I think that round was announced in early 22 before we launched the fund. We launched the fund summer of 22. We're kind of scrambling to look for ideas and interesting things to research. And I think at the time, shortly after, Metaplex had published its white paper. I believe its TG had happened in September or around that time frame in the fall. We had asked the Multicoin team, which had backed our fund launch, to connect us to the Metaplex team. So that happened in October. And we actually purchased our first token of Metaplex in November, almost immediately after the FTX collapse. I think at the time, we were always really fascinated by the Solana ecosystem because the architecture choice it had picked just allowed it to do things that were structurally very different and unique relative to what you would see on the EVM ecosystem. I think if you looked at the last bull market, you had BNB Chain, you had Avalanche, you had Phantom. They're all essentially EVM forks where they cranked up the gas limit and they massively increased the hardware specs of what validators needed to be able to process transactions. But there's not a lot of actual kind of infrastructure change in terms of, okay, what sort of new applications can you enable? I think most of those chains at scale would have run into the same sort of expensive fee issues that Ethereum ran into when it gained a lot of activity. And Solana presented something that had the possibility at the time. It was not a certainty, but had the possibility to look very different. So we were looking for applications in the Solana ecosystem that we thought could be very interesting. We went through a lot of different things: lending protocols, DEXs, perp protocols, liquid staking protocols. But we came across Metaplex, which we thought was something very, very unique in terms of what it facilitated. But also it was pretty one of a kind. If you looked at the stats at the time, I don't remember the exact number of NFTs that were minted. Today, Metaplex has done over 500 million life to date, but 99.9% of the NFTs on Solana were minted through Metaplex. It had this very, very interesting position in the Solana ecosystem that we thought was incredibly different than many other things that we had seen. So that was where the thesis first developed. We'd met with the team, followed a lot of their progress. We saw them launch Bubblegum in Q1 of 23. We had always believed the protocol, which at the time was free, but would be able to roll out some sort of fee and charge something for a lot of the value that it provided to the Solana ecosystem and to developers. That fee eventually did get rolled out in mid 23. So now on the regular NFT mints, it costs 0.01 SOL, which is a relatively nominal figure. And then, over the course of late 23 and 24, we've seen a lot of other products roll out. So for us, it was a very incremental thesis build, and that's kind of how we tend to approach it as a fund as well. It's quite rare for us to, look at something in the span of 30 days. It's like, hey, this is the thing that is the best thing since sliced bread. I think for us, we really built up that conviction over a span of a year plus of just following the track record of the team. And we followed a lot of different teams over the bear market. I would say it was quite obvious which teams were still motivated, hungry, continue to grind, continue to ship product, continue to focus on product market fit and usage as the North Star, and which teams were focused on that. And it was quite clear which teams were checked out, no longer shipping, calling it quits or quiet quitting as what happens to a lot of protocols. And Metaplex was solidly in the camp of a team that was hungry and was doing all the right things that you wanted to see in terms of a protocol having a very bright future. So we eventually published our thesis on our website in October. We didn't know at the time, but that more or less coincided with the huge boom that Solana had in terms of the Jito airdrop, which kicked off a lot of things. And obviously over the last 12 months, Solana has had a pretty terrific run and flipping Ethereum on fees in a handful of days. But it's been pretty incredible to see that journey and Metaplex grow a lot over the past 2 years.
Did you join after the Multicoin round? And then because you had folks like Multicoin, clearly they know what they're doing, but then you had some folks like Michael Jordan that are like, do I have to are you on the phone with him? Like, hey, you got to download this browser plugin called Phantom, send me the wallet. Is that the process, or how does one work? I actually have never talked to any founders about celeb investors or celeb backers.
Yeah. No, it's a good question. So I did join after all of that. I joined, I think, literally the week before the airdrop. So quite a bit after that round was closed. So I did not get to enjoy interacting with Michael Jordan. Unfortunately, that would have kind of fulfilled a childhood dream of mine. But I'm afraid I missed out on that one. You're right, though. I think there were a lot of backers of the Metaplex protocol and community members across a really diverse range. And so some of them, to your point, are incredibly savvy. They've done this many times, and they certainly know how to use a wallet. Others don't know how to set up a wallet. And so I think we have grown throughout kind of the last couple of years in terms of who kind of those community members are, and have been really fortunate to have other established and thoughtful contributors like the Modular team and others kind of join the community. But yeah, unfortunately, I did not have any direct interaction with Michael Jordan. And I think Allen Iverson, I want to say, was in there, maybe Indomitian Sue as well. So there was a couple pretty successful athletes.
Yeah, hopefully they're still following crypto and haven't given up on us. Although I guess if things keep ripping, they'll certainly come back into the fold. James, you kind of talked through in the Metaplex examples, hey, we're looking at the Solana ecosystem, looking for unique, applications, middleware protocols that we think we can express our thesis through. How do you as a liquid fund, are you going on to CoinGecko page 4 and below and saying, hey, what can we find in here? What's the process look like?
Yeah, I would say it's a pretty multifaceted approach. We're chronically on Twitter, like many other people. So every time something TGEs or is about to list, we're usually following those. We see a lot of the interesting things that are being backed by venture investors. So every so often, we will follow those over its journey, both from a product perspective, from hey, here's really interesting things happening in the ecosystem, and eventually a lot of those will come to the liquid markets. There are just screens that we run in CoinGecko. So at the time, we would just go and filter, hey, what are things in the NFT ecosystem? What are things in the Solana ecosystem in terms of projects that one could look at? We read a lot of research reports that Blockworks, Masari, Delphi might publish. So I would say it's pretty multifaceted. There's no one source. It's quite different than equity markets where there's a pretty limited amount of companies that go public every year. With tokens, it's permissionless, which means the funnel is just much larger, and there's no central repository that tells you, hey, this is everything that's come into the liquid markets. But it was quite thematic for how we came across Metaplex, and it was a relatively known name in the Solana ecosystem at the time. Like I remember seeing Metaplex publish the white paper leading up to the token generation event, and I remember going through and was trying to understand, like, hey, I remember reading about this thing during the bull market. Like, what does it do? Oh, it's finally a liquid token. Hey, is there an opportunity for us to, kind of see if this is something that could be interesting for us? But that was kind of the process. I would say it looks pretty similar to most other liquid tokens that we've stumbled across. Across has been, one that we spent a lot of time in, and for that, it was pretty programmatic, just filter through, hey, what are all the bridges that are out there in the ecosystem? For something like GeoNet, which is a DePIN project, we just went and filtered, hey, what are all the DePIN things that are out there? So it tends to be pretty sporadic, but there's no one size fits all, just given the velocity of token issuance in this market.
Got it. Maybe just to kind of wrap things up, moving forward for Metaplex, there's obviously a bright future for Solana. It seemingly is getting brighter by the day. Yeah, what should people be expecting or excited about as we head into 2025? I'm sure both of you have views on this. So yeah, maybe for both of you.
Yeah, happy to jump into that first. So as I mentioned, we announced the Metaplex Aura network about a month ago at this point. And so we're spending a considerable amount of time right now driving adoption of that, working to optimize performance. And so doing that hand in hand with a lot of different teams across the ecosystem. And I expect that to be a considerable focus area for us going forward. We view it really as, I think, a jumping off point in terms of our ability to continue to fold in new functionality into the protocol, as well as an opportunity to continue expanding kind of the on-chain economy around MPLX. I'd say the second thing that we're spending time on as well, folks have probably seen kind of the proliferation at this point of different SVM environments. We actually have deployed our own kind of product stack to one SVM L2 called Sonic, another one as well called Eclipse. And so in addition to providing an opportunity to deploy our programs there, it actually also gives us an opportunity to deploy our Aura network there as well. And so as we think about that, it's really, I would say, pretty unique position that we sit in kind of at both the middle of the right side of the transaction and the read side of the transaction, and gives us an opportunity to build kind of like a unified data layer that connects Solana and all these different SVM ecosystems. And then I'd say the third kind of focus area for us is really just continuing to make sure that all of the new and kind of greatest applications in crypto are being built on Solana. And so we are building kind of tools and programs that empower developers to do that. I know we already spent a little bit of time talking about the evolution of NFTs and different utility that can be associated with that. And so making sure that Solana is kind of the ecosystem that those innovations are happening on, we want to be at the heart and center of that. And I think it's still very much early innings there.
Does Aura? It's funny. Do you guys compete with Helios then on that front? Because I know they do indexing as well.
Yeah, it's a great question. So they actually, the indexing they offer today, they are actually running kind of a fork of software that's open source software that we built in collaboration with Helios and many others in the ecosystem called the Metaplex DOS API. Aura essentially is decentralized infrastructure that's offering a better, improved version of that, more performant. As I mentioned before, it's also decentralized as well. And so we do anticipate other infrastructure providers to run nodes behind this network, and ultimately giving developers a choice whether they want to use, say, an RPC provider to get their data, or they want to use more of a decentralized service offering. Our kind of goal is to provide developers with an end-to-end solution for creating assets and also reading the data associated with those assets. And so we view kind of the ultimate end state for that is developers not needing to stitch together a bunch of individual solutions, but instead going to one place where they have all of those things. And so many of those developers, they are kind of beginning their journey with Metaplex. They're in our docs. And so if we can provide them a place to also continue that journey by accessing the data through a decentralized network, that's certainly something that we think is an attractive place for us to sit.
Yeah, I guess competing with Mert and his Twitter following I feel like I saw Trump like retweet one of his tweets this week. So certainly an interesting dude to have in the ecosystem. James, what about you? And then maybe more broadly, like some predictions on the liquid markets for 2025.
Yeah, happy to share. I think Mack has done a good job laying out a lot of the product side for Metaplex, and all the things he shared we're very excited about. I can kind of lay things out a little bit, both by the numbers, but also maybe some of the liquid token dynamics leading up to this point. I think this year, like year to date so far, Metaplex has done something like $17 million worth of fees. They're on track to do over 20 million for the full year 2024, which I think is pretty incredible. I think it shows you, the breadth of what they do, but that's a fairly large number and probably puts them in the top 5 protocols in terms of protocol fees generated in the Solana ecosystem. I think heading into next year, they have this incredible product suite they're rolling out. I think they've established themselves pretty much as the de facto token standard that you're going to use as a developer. It's the easiest, it's the cheapest, it's the most widely adopted, has the most integrations. The core standard makes it easy for people to build extensions on top to make it more extensible. We think Aura is going to be really interesting in terms of that market opportunity that opens up. So I think as the Solana ecosystem continues to grow, as you continue to see a lot of financial activity, asset issuance happen on the chain, I think there's a potential for Metaplex, and this is not financial advice, but for that protocol fee number to be something much larger than the 20 million that's on track to do in 2024. So we think there's a very bright future ahead. We've been holders of the MPLX token for over or almost 2 years now. At this point, it continues to be something that we're very excited about, and just very big fans of the team and the product that they continue to ship. I think on the liquid token side, I can point out a few things. I would say
this is when James shares the alpha.
I can point out a few things. So I think market structure in liquid token markets have just evolved very, very substantially. I would say compared to 2 years ago, where it was fairly retail dominated in terms of just price action of a lot of tokens. And I would not say there were a lot of institutional funds that were the marginal buyer or seller. I think this cycle it's been substantially less retail dominated. I think even on the institutional side, you've seen a lot of the flows naturally go to Bitcoin. But what you've kind of seen is just a lot more rational price behavior in liquid markets. There was a moment in time where people would build some infra project, no customer, no users, pretty unclear what it does. It may or may not be live, and the token launches and it's $5 or $10 billion, like some large number that you would never see in traditional non-crypto markets. There still is froth, but I would say a lot of that has come out, and I think there's this huge reorientation of a lot of teams where the focus is moving away from how do I tell a good story, how do I do this narrative game, like how do I do all this stuff, and more of how do I build a good product, how do I show product market fit, how do I show that this is a protocol that can be productive over time, i.e. we have a product that there are users and customers that are willing to pay for. And you've seen a lot of liquid token funds like us that have this more fundamental view and bias towards the market. And I think that has increasingly come to dominate the markets. You can see this with a lot of old cycle projects as well. There's a very large difference between protocols like Aave that do, that were very, very hot during DeFi summer, but today has kind of grown back to, dominance because it does, almost $100 million of annualized revenue. And there's a lot of projects that, I won't name all of them, but there are a lot of DeFi projects that have faded, that don't have prices, that have rebounded because they haven't shipped, because the product doesn't have product market fit, because after this whole narrative of DeFi summer from 3 years ago, there's no liquid funds on the other side of the tunnel that have done the work and are interested in purchasing that token. So I think that has probably been one of the biggest adjustments that we've just broadly seen in the market over the past 2 years. I think there is way more dispersion in the market in terms of performance of individual tokens. It's not indiscriminate. I would say in 2020, 2021, a lot of times it was quite indiscriminate. Like if you just put money in stuff, they kind of just all went up. I would say that dispersion is something that a lot of liquid funds like us have experienced and seen in the market in terms of how tokens have performed in the liquid markets. So that's one thing. I think the second thing is I really think the market has evolved from this overbuild of infrastructure to this focus on applications of all sorts. I think you can see that in a lot of forms. I would say like Pump.fun is an application that allows users to mint assets and speculate. You have a lot of DeFi products that have grown up and reached tremendous scale. We're very big fans of the DePIN category, which has had a lot of kind of very promising players that are now several million in annual revenue, including Helium, Hivemapper, GeoNet, et cetera. And we're really excited about the things going on in that category. Bridge just got purchased by Stripe for $1 billion. I think it's shown the potential and application of stablecoins. But we've kind of moved into this world where there's a huge abundance of block space. I would say whether you're in the Solana ecosystem, whether you're not, there is a plethora of places you can go and be able to build applications and have very, very cheap transaction fees that are on the orders of cents or sub-cents. So in the past 4 years, we've kind of moved away from a world where we need more cheap block space. We need more cheap block space. And we moved to a world where, okay, there's so much cheap block space. And the question has moved more towards, okay, what do we do with all this, right? And I really think 2025 is going to be front and center about applications that focus on delivering product market fit. And we're really, really excited to see what that has in store.
Yeah, I like the prediction. Thanks, James. Thank you both. Awesome conversation. Great to hear more about what Metaplex has been doing. And then James to drop some knowledge on the liquid side. Hopefully people listen and educate themselves. Thank you again, and looking forward to seeing you all soon at some crypto event.
Sounds great. Thanks for having us, Mike.
Thanks for having us. This is tons of fun.
Bye.